Hey, what's up, stock compounders? Brad here. So today I want to talk about stock buybacks, share buybacks, otherwise known as Uber Cannibals in Mohnish Pabrai's free lunch portfolio. Uh, so this is a table here of 7 recent picks of Uber Cannibals, companies that are buying back their own stock fairly aggressively. And so I just wanted to use this to explain the concept of stock buybacks and just take a quick look at some of these picks from the free lunch portfolio to see what we're looking at here. So, these two columns here, you've got the number of shares outstanding from 2010, and you've got the number of shares outstanding from the most recent quarter. I pulled this data from Value Line. So you can see here I've sorted it by how aggressively these companies have bought back their shares or retired their shares over the last 10 years. Essentially what this means is if you had bought a 10% equity stake in Assured Guarantee in 2010, you'd have a 21% equity stake today, all right? Not by buying back any more shares, just because basically half of the pie has been retired. So that's a pretty powerful thing in terms of growing wealth. But there are some nuances that you need to be aware of. If the company is buying back shares at a price that's much higher than value, that can be detrimental to shareholders, because there are other things the company can do with that money, whether it's excess earnings, whether they're taking on debt to do this. There's opportunity costs, and that includes plowing that money back into the business to grow the business, if that makes sense, to pay out dividends, to make other investments. Think of Warren Buffett. Berkshire Hathaway, he was using the money that was coming in from Berkshire Hathaway as it was dying to invest in other businesses, right, at very attractive prices. So there are opportunity costs that need to be considered in order to gauge whether management is doing a good job of, conducting share buybacks, using that money wisely for the shareholders. So, I just wanted to take a look at these picks from Mohnish Pabrai in the free lunch portfolio. How aggressively were they actually buying back shares? And you can see these 7 picks. The ones that are highlighted blue and italicized are not Pabrai picks. Those are companies where it's kind of well known that they have fairly large share buyback programs. And I just wanted to throw those in here to kind of give some perspective when we're looking at these specific free lunch portfolio Uber Cannibals. So you can see, 10% in 2010 would have been 21% today. And then on the low end, you've got 10% of the equity in 2010 would be a 14% stake today. So, and then I included these 2 columns, earnings yield and return on invested capital. These are, metrics that Joel Greenblatt uses to determine how cheap a business is and how good a business is. Earnings yield is also very similar to the acquirer's multiple, which Tobias Carlyle, when he was backtesting the magic formula and, running other screens, he found that just using cheapness versus using both cheapness and how good a company is combined seemed to return a little bit better than the magic formula. So anyway, I won't get too much into that here, but this just gives you a sense for kind of a rough estimate of how cheap the businesses are, how good they are. Now with the asterisks, those are return on equity, because these are insurance businesses. Right here, Globe Life, Primerica, and Assured Guarantee. And return on invested capital doesn't quite work with insurance businesses. So I'm using return on equity as a proxy. And then you can see here the number of super investors that own these companies. And this is kind of interesting. I put a minus or a plus if all of those super investors either sold some of the position in the most recent quarter or bought some of that position in the most recent quarter. So in this case, there's two super investors who own Assured Guarantee. The position didn't really change in the last quarter via 13F filings. For this one, there was quite a dramatic decrease in the position in the last quarter. This one, all three of these super investors added to the position in the last quarter. So that kind of gives you a sense, what super investors are seeing in terms of were these at attractive prices in quarter two, or maybe were they at unattractive prices where you see this minus sign after. And then, of course, here we have VIC, Value Investors Club write-up. Was there a write-up for these companies? And you can see most of them don't actually have a write-up. 6 out of the 10 don't have a write-up. This one was interesting, and we're going to get a little bit more into this one in these other tabs here. There was a write-up from August 2018. There was a long write-up, and then the day after that long write-up came out, there was a short write-up, okay? So that was really interesting, and I want to take a quick peek at this short write-up and point something out that's related to share buybacks. So this last note here, net debt is now up to $180 million from $73 million last quarter as the company is aggressively levering up the balance sheet and using it mostly for share buybacks. So this is a situation here where the company is retiring stock. They're buying back stock by using debt. And I'm not a big fan of that strategy in general. If you look here at the balance sheet for Sleep Number, you see total debt, $570 million. There's no cash. All right, there's $160 million in free cash flow. So the debt is more than 3 times higher than the trailing 12 months free cash flow. That's getting into a concerning level of debt to me. You can see there's negative equity, $160 million negative equity. And that's really just to balance the books. The liabilities are higher than the assets. So the equity has to be negative in order to make everything balance there. But not a great situation. Not something I get excited to see on a balance sheet. So, that's just something to keep in mind when you're evaluating these companies that are cannibalizing themselves, which can often be good. But are they using debt to do it? Are they buying their own stock back when prices are much higher than values? Those are some situations where, it might not actually serve equity investors for the company to be buying back its own shares. So, I just wanted to go over this list. Honestly, nothing here really compels me to look deeper into any of these companies. I don't understand insurance businesses. So even though this earnings yield looks very attractive to me, normally I would be interested, but it's an insurance company. I don't know how to understand it. So I have to pass on that one. But these companies that aren't insurance companies, Sleep Number, we saw the red flags in the short thesis from Value Investors Club about the aggressive buybacks using debt. Lowe's is actually a 22% position for Bill Ackman in Pershing Square. So he's got a lot of conviction on this one, but nobody was buying in the last quarter. Okay, actually, Bill Ackman was buying a little bit, but it seems expensive to me at a 4.5% earnings yield. So not too interested in that one. Allison Transmission, it's a pretty weak return on invested capital. Again, this is an insurance business. And then these earnings yields aren't compelling. And then PulteGroup is somewhat interesting. It's got a pretty attractive earnings yield. The return on invested capital, and just to be clear, this return on invested capital is a 10-year kind of median return on invested capital. So it's not the most recent year, it's the median from the last 10 years. PulteGroup, somewhat interesting, but really the return on invested capital would have to be quite a bit higher for me to be interested in diving deeper into this one. And ideally, I'd really like to see a Value Investors Club write-up as well. So that's it, guys. I just wanted to kind of dive in a little bit with the Cannibals, the stock buybacks, and educate myself a little bit more, get a little bit more comfortable analyzing that kind of a situation. So I did this exercise today, and I thought I would share it with you guys. So that's just a little bit about stock buybacks, companies that are cannibalizing themselves. So yeah, let me know if you're buying any Cannibals right now, or if that's part of what you look for in your investment approach. I'm curious to hear from you on that, and if there's any Cannibals you like at the present moment. Anyway, guys, that's all I got for today. I will see you in the next video. Take care.